Income tax. Everybody who has an income has to pay tax. This tax is used by the government to provide schools, hospitals, roads, and many other services. The rate of tax varies from year to year and country to country. Income before tax is called gross income or gross pay. You do not pay tax on everything you earn. Each earner gets tax credits, depending on the amount of allowable expenses they have. Tax credits are deducted from your tax bill. Income tax in Ireland is charged at two rates, standard rate and higher rate. In this book, we are concerned with tax at standard rate only. To calculate the take-home pay, also called the net income or the net pay, we subtract the tax payable, also called the tax due, from the gross income. Pat's gross income is €28,000. He pays all his tax at the standard rate of 20% and has tax credits of €2,500. Find Pat's net pay for the year. So another word for net pay is his take-home pay. So we want to figure out, well, how much does he actually take home with him once we've taken off the deductions? So his gross income is €28,000. So that's his income before the tax is deducted. So he's not going to go home with €28,000. It's going to be lower than this. So we're going to get 20% of €28,000, and then we're going to subtract the tax credits, which are €2,500 from his tax, and whatever is left we will subtract from his gross income, and that will leave us with his net pay for the year. And again, another word for net pay is your take-home pay. So his gross tax is going to be 20% of €28,000. In maths, of means multiply, so we're going to do 20% multiplied by 28,000. So you can input into your calculator 20 with the percentage symbol, multiplied by 28,000, or you can change 20% into a decimal, which is 0.2. So 0.2 multiplied by 28% gives us €5,600. So this is his gross tax, €5,600. And if you wanted to do this another way, you could have gotten the 20% by dividing 28,000 by 100 and multiplying by 20. You can use whatever method you want to find percentages. So his gross tax is €5,600. And now we're going to subtract the tax credits, which are €2,500, from the gross tax. And that will tell us his tax payable, the amount of tax he actually does have to pay. So his tax payable will be his gross tax, €5,600, minus his tax credits, which are €2,500. And €5,600 minus €2,500 gives us €3,100. So this €3,100 is his tax payable. It's the amount of tax he must pay. So remember, his gross income was €28,000, and we said he won't go home with that. He's going to go home with a less amount than that. So now we know the amount of tax he will pay. It's €3,100. So we just have to subtract this from €28,000, and it will leave us with his net pay, or his take-home pay. So his net pay, his net income, or his take-home pay, is going to be his gross income, which is €28,000 given to us in the question, minus his tax payable, which is €3,100, which we just worked out over here. So his gross income, €28,000, minus his tax payable, €3,100, leaves us with €24,900. So this is Pat's net pay, or his take-home pay, and this is the amount of money that he goes home with. And a good way to learn off the difference between net pay and gross pay or net income and gross income, is that your net pay or your net income is the money that you take home in your net. So if you think of a net is like a pocket. So the money that you bring home in your pocket, the money you actually take home with you, is your net pay. Whereas your gross income or your gross pay is the money you start off with, the money you have before you take away the tax. So €24,900, this is what Pat takes home in his net or in his pocket. This is his net pay or his net income, or you could call it his take-home pay or his take-home income. Louise earns a gross salary of €26,850. She has tax credits of €3,000 and is taxed at the standard rate of 20%. Louise has arranged for a deduction of €900 for private health insurance per year to be made by her employer. Part 1. Calculate her annual, which means her yearly, take-home pay. So another word for take-home pay is her net pay or her net income, after all deductions have been made. So that's after you've subtracted the tax and after you've subtracted the private health insurance, which is €900. Remember, we don't know the amount of tax to be paid just yet. We have to work that bit out. Part 2. What percentage of her annual income is deducted in tax? Give the answer correct to 2 decimal places. First of all, if you don't answer this correct to 2 decimal places, you will automatically lose marks. So be careful with rounding. So we're going to work out a percentage of her annual income. So that's another word for her gross salary. So that's $26,850. A percentage of her annual income is deducted in tax. Now we don't know what the tax is just yet. But when we do, we will divide the tax by the annual income, which is $26,850, and multiply by 100 to get a percentage. So her gross tax, which we do not know yet, is going to be 20% of $26,850. So we have to get 20% of $26,850, which is her gross salary. And in maths, of means multiply. So we're going to do 20% multiplied by 26,850. So you can stick into the calculator 20, stick on the percentage symbol, multiplied by 26,850. Or you could input into the calculator 0.2 multiplied by 26,850. So it doesn't matter if you want to use the percentage method or the decimal method, or if you wanted to use the fraction method, you could divide 26,850 by 100 and multiply by 20. Either way, you'll get the same answer. So 20% of €26,850 is €5,370. So this is her gross tax. Now we need to take off her tax credits, which are €3,000. So we're going to subtract her tax credits of €3,000 from her gross tax of €5,370, and that will give us her tax payable, the amount of tax she does have to pay. So her tax payable is going to be her gross tax, which we just worked out to be €5,370, minus her tax credits, which was given in the question as €3,000. So that's €5,370 minus €3,000 leaves us with €2,370. So this is her tax payable. This is the amount of tax she will actually pay. So remember, we're trying to calculate her yearly annual take-home pay after all the deductions have made. We know she starts off with €26,850. This is her gross salary or her gross pay. We're going to subtract her tax payable, which is €2,370. But we also have to subtract her health insurance, which is €900, and this will tell us how much she goes home with. So to work out her total deductions, we can add her tax payable, which is €2,370, to her private health insurance, which is €900. This will give us the total amount that's being deducted. So her tax payable is €2,370. We're going to add that to her private health insurance, which is €900. And we get €3,270. So this is her total deductions, the total amount that's going to be deducted from her gross salary of €26,850. So her take-home pay, or her take-home income, which is also known as her net pay or her net income, is going to be her gross salary, which was 26,850, minus her total deductions, which we worked out to be 3,270. So €26,850 minus €3,270 gives us €23,580. So this is her take-home pay or her net pay. And that's what we were asked to find. We were asked to find her yearly or annual take-home pay after all deductions had been made. Now, another way to get this number, just a slightly different way, is when you got down as far as here, €2,370 for the tax payable, if you said 26,850 minus 2,370 and minus the €900 for the private health insurance, you would get 23,580. So that's just a slightly different way of doing it if you didn't want to add these first of all. So now part 2, we want to work out the percentage of her annual income, which is her gross salary, is deducted in tax, and give the answer correct 2 decimal places. So what percentage of her gross salary, 26,850, is deducted in tax? So her tax payable is €23,700, and her annual income, which is her gross salary, is €26,850. So we're going to do €2,370 divided by €26,850 and multiply that by 100 to get a percentage. So tax as a percentage of gross pay is going to be €2,370, so that's her tax payable, divided by €26,850, that's her gross salary, multiplied by 100 or just by 100 over 1, and rounding to 2 decimal places gives us 8.83%. So this is the percentage of her annual income deducted in tax.